Hello friends, in today's session we will discuss the provisions of section 147 of Income Tax Act 1961 which deals into income escape assessment. So the first point which comes into our mind is why section 147 procedure is there or for what section 147 proceedings are there. We already know that the department has the procedure of section 143(3) which is called a scrutiny assessment, and where the assessee does not cooperate, the department has the procedure of section 144 which is called best judgment assessment. So when they already have in place the assessment procedure of 143(3) or 144, why come there is a need of section 147 which is income escape assessment? Naturally what happens in these kind of assessment, there is a time limit which goes up to 2 years from the end of relevant assessment year. So let's assume that for the assessment year 2014-15, a scrutiny assessment or best judgment assessment is to be made. It can be made only up to 2 years from the end of relevant assessment year, which will expire on 31st of March 2017. But we know that sometimes the department may unearth some information, department may come with some information later, and then it might be finding that the assessee has not filed his return, but whereas he was required to file the return, he was supposed to be assessed within this period. Now that period has expired. So then department needs a special machinery which is called income escape assessment, and this is not too easy for them to make a income escape assessment just on the basis of some rumor or kind of any information. They first need to establish that they have reason to believe. So if the department has reason to believe that the assessee has income which has escaped assessment, and the department has no time limit of 143(3) or 144, then the department can move into section 147 procedure. So basically, the department has the right to do, or it has an opportunity to do 147 kind of assessment, where normal time limits of 143(3) or 144 have expired. And they come up with certain reason to believe in their hand, which establishes that assessee had income, but he has not filed the return, he has not paid the tax liability and all. So some examples of how the reasons to believe could be found, could be framed, could be there may be a property sale, there may be a property purchase which might be assessee is not filing through his return of income. There may be some transaction, banking transaction like deposit of cash in huge amounts in bank account, but the assessee still might have not filed the return. TDS might be deducted, but the assessee has still not filed the return. So the department comes with a reason to believe that this assessee is now needed to be assessed under the procedure of 147. So this gives us the reason of doing 147. Now once the department has created a reason to believe, which may be based on a question of law, which may be based on a question of fact, like the situation which is available before the authorities, then they will ensure that a 148 notice is issued of the assessee. And this notice of section 148, which I said, would take the color of time limit from the provisions of section 149. And simply speaking, section 149 provides us the time limit for issue of notice under section 148, which is generally 0 to 4 years from the end of relevant assessment year. After 4 years, but up to 6 years from the end of relevant assessment year, provided that the reason to believe is for a minimum amount of rupees 1 lakh income. So I can say that where an assessment is getting opened up under 147 or a reassessment is getting opened up under 147 and it is happening within 0 to 4 years from the end of assessment year, then there is no quantum specified in the law regarding the income. However, where the assessment is getting opened up after 4 years but up to 6 years, the minimum quantification of the income for which reason to believe exists should be of rupees 1 lakh. Not only that, in certain special cases where the income arises from assets located outside India, the department may go even up to 16 years from the end of relevant assessment year, which is very critical for us to know. Because nowadays there is a lot of hue and cry in respect of these kind of matters where a person has assets located outside India but he is not filing the return, then the department can capture them up to 16 years from the end of relevant assessment. And mind you, sir, This time limit is that of issue of notice, not of serving the notice. So if a notice under 148 is prepared and sent within this time limit, that it is issued within this time limit of 0 to 4, 4 to 6 or to 60, and it is served later on also on the assessee. The assessee is supposed to provide the relevant information. Now when I said relevant information, what do I mean to say? Section 148 is a notice which calls for the assessee to file a return in response to 148. Now naturally, the department through the return is giving the assessee an opportunity of being heard, and the assessee will then tell to the department, okay, for this assessment year my income was this and this. Now it is an option appearing to be in the hands of the assessee that he may reply or he may not reply. So if he will not reply, then what will happen? The department will assume that he is not cooperating, and most probably the assessment under 147 shall then happen in the manner of 144, that is best judgment assessment. And where the assessee cooperates, where the assessee supports to 148 notice, he provides the information, he provides the return, then the assessment shall happen in the manner of 143.3, that is a scrutiny assessment. So I can say that the department, when giving a notice under 148, it is providing an opportunity of being heard to the assessee, asking him to file the return. The assessee, while filing the return, would ensure that whatever he has escaped is disclosed there in his return. But an interesting question may arise that where an assessee has already been assessed previously, or he has already filed a return previously, and now a 148 is happening, what he should do? Again, it would depend that whether assessee knows that what kind of reason to believe is there. So this takes me to a third query, that when such notice is issued to the assessee, can he ask for the reason to believe from the department? The answer to this question is the department is not required to provide the reason to believe upfront to the assessee while issuing a notice under 148. Assessee should first submit his return and then he can call for the reason to believe. And that department is duty bound to provide the same. So reason to believe is not to be provided upfront. Reason to believe shall be provided once assessee responds to it. And while the assessee is filing 148 return, he has to himself see what kind of income may be there which might have escaped earlier, even if he might have filed the ROI or he might have been assessed. And if he feels that there is nothing which is in his hands saying to be, sad to be, income escaped assessment, he may file the similar return which he might have filed earlier. Okay, one. Now when the assessee has differed from his earlier return, naturally the scrutiny would be along with that information which assessee has now produced, and the information which the department might also have gathered in addition to the details which are submitted by them. And in totality, after looking into all these particular informations which assessee might have submitted or department might have considered, an assessment order of section 147 shall be passed. So question then again, what is the time limit of completion of section 147 assessment? This time limit of completion of 147 shall take color from section 153 subsection 2, and this subsection 2 of 153 says that an assessment under section 147 has to be completed within 1 year from the end of the financial year in which notice under section 148 was served upon the assessee. So let me exemplify it for you. Assuming that a notice for the assessment year 14-15 under section 148 is made upon the assessee on 11th of June 2018, which got served upon the assessee on 7th of July 2018. Naturally, with this concept which I have given you, by this date 143.3 and 144 time limit has already expired. And now the department might have in its possession reason to believe due to which, and surely there has to be reason to believe for which they are issuing a 148 notice, which is then served on the assessee on 7th of July. So the time limit of 12 months from the end of the financial year in which notice under 148 was served would expire on 31st of March 2019 plus 1 year, which is 31st of March 2020. So by this date, an assessment order of section 147 shall be passed, and accordingly we can say, now again to conclude, 147 is possible generally after 2 years from the end of 11th assessment, when this time limit has expired. 148 is based on 140, 147 is based on 148 notice. This 148 notice is required to be issued within 149 time limit. Once this notice is served, assessee cooperates, then the manner of 147 shall be scrutiny assessment. If assessee does not cooperate, it will be 144. Accordingly, this kind of assessment can be completed within the time limit of 153 subsection 2. So thank you for the day.